So guys, our next standard will be IND-AS 116. Sir, IND-AS 116 is a version of your IFRS 16. As far as your present syllabus is concerned, this is the latest standard. Standard is easy only. Of course, after doing instruments for some days, you will find any other standard easy only. But this is equally lengthy. And there are a lot of points to remember. Standard is not complicated, but there are a lot of points to remember. So many ifs, buts, conditions, conditions plus subconditions, one word interpretation, this type of things are there. But some are easy, sir. Questions are very, very easy. There is nothing that you will not understand at all. Anyway, going to the basics of this standard. Sir, earlier there was a standard. You need to actually know the history, but still, original standard was IND-AS 17. IND-AS 17 was almost equal to your AS 19, where we used to have this classification of finance lease, operating lease, lessee books accounting, lessor books accounting, sale and lease back accounting, like that. So AS 19, if somebody was very good at your basic level, IND-AS 17 used to be a very simple thing for them. But now what happened is IND-AS 17 has been withdrawn, and IND-AS 17 place low we have got IND-AS 116. Why IND-AS 116 has to come is IND-AS 17 was basically originating from IAS 17, sir. But IAS 17 is gone. In that place, they gave IFRS 16. So correspondingly, IND-AS 116. And this is a mandatory standard. We'll go and see the standard in deep. But before we go into the standard, one basic point, the main change of this standard, if you understand, it will be easy for us to work our way further. What is this is? Normally earlier, sir, that means in your AS 19 or your IND-AS 17 law, what we used to do is, leases we used to categorize, sir, into a financial lease and an operating lease. If you call any lease as a finance lease, then lessee books law, we used to capitalize the asset. We used to record the asset and a corresponding lease liability. And the lessor books law, asset is derecognized. And finance lease law, lessee is treated as owner in substance. Legally, he is obviously not the owner, because legal owner is a lessor. You understand the two parties, lessee, lessor. Anyway, definitions are there, slowly we'll go to that. But basic idea you must be having. The owner is called as the lessor, the user is called as the lessee. A lessee, even though he is merely a user, but in substance, he is the owner if the lease is categorized as a finance lease. Suppose, sir, an asset life is 10 years. Out of 10 years, useful economic life, I took the asset on lease for 9 years. After using it for 9 years, I give the asset back to you. You will use, or you will sell, or you will again sublease it, that doesn't, or you will again lease it to somebody else, that's a different thing. But 10 years life flow, if 9 years I am only using it, virtually all the benefits from that asset are enjoyed by the user only, no? So his standard feels that you might not be legally a owner, but all the benefits you only enjoy. Therefore, you are a deemed owner of the asset. Since you are a deemed owner of the asset should appear in your books of accounts only. So capitalize the asset in your books, even though you are not technically the legal owner. And this is something, even before your leases understanding of AS 19, you did one chapter called as a hire purchase. In the books of hire purchaser, the first entry, what we used to read is machinery account debit to hire vendor account, or trucks account debit to hire vendor account. We used to write this. Why, sir? A hire purchaser anyway will become the owner when on payment of the last installment. So he knows that he is going to become the owner, but amount only he is paying in parts. But asset ka full control he was only having. So he was capitalizing the asset in his books. Fair enough. This is finance lease, sir. But the story in operating lease was like this. If it is an operating lease, then in lessee books, no capitalization of asset. Sir, but every month or every year we pay lease rents, no? Rents transferred to PRL. In lessor books, asset continued, rents, income in payroll. In this case, a lessee not treated as owner in substance. This was the accounting what was there earlier, sir. AS 19 this is there, IAS 17, Ind AS 17, this is there. Now this is removed, sir. In this place some other accounting has come. Now what is the problem with this? First of all, to remove this, the problem is if you go to industries like aeroplane industries or airline industries or heavy steel manufacturing industries, power generation industries, and some pharma industries, their major assets are leased assets. That means if they are having 100 crores assets worth, in that 80 crores worth of assets are only leased assets. But 80 crores worth of leased assets are not appearing in their balance sheets. Why are they not appearing in their balance sheets? Is a lease technically did not qualify the definition of finance lease. Since it did not qualify the definition of finance lease, they never used to capitalize it. But asset is still there with them. Asset is still there with them. They are fully using the asset nicely only. Of course, it's not a finance lease. Since it's not a finance lease, whatever rent expenditure they are paying, whatever lease rents they are paying, that they used to throw it off into P&L account. But because of that, what is happening is, imagine, sir, a company which is having a huge asset. Suppose, sir, you are an airline company, sir. Okay. So your major asset is what? Land and building. No, flights only. You don't, let's say you are having some 40 flights. You go and check balance sheet of any airline company, sir. Out of their flights, at least 75% flights are not their own flights. Only leased flights, sir. Leased flight, they get it and they put their branding on that. Nobody will buy a flight and operate. There will be flights, own flights also, but less number. So used flights, they lease it, sir. Okay. Now, if 40 flights unte, sir, in the balance sheet only 5 flights are only visible. Why? They are own. Let us say another 5 flights are also there because they are coming under. So out of 40 flights, 10 assets are only appearing in your balance sheet, remaining 30 are not appearing. And let it not appear, sir. That is not a finance lease. No. Why should it appear? What is your problem with that? See, in remaining 30 assets, whatever you are having, we understand that it is not a finance lease, correct? But generally, operating lease and a word meaning is a lease which is other than a finance lease. Negatively, it is defined. But if you go and see the provisions of operating lease, examples of operating leases are those leases where lease period is short compared to the life. Suppose asset life is 10 years, lease period only 4 years. You will say that, sir, lease period is not a major portion of the life of the asset. No. Therefore, it is not financial lease. This is a operating lease. Or let's say this example on it. Out of 10 years, you took it only for a period of 4 years. But if 4 years is not a major portion, no. So you are not the owner. Therefore, you are not capitalizing. Whatever they are doing is right only, no. But you see another school of thought here. That is, forget about the life and all. 4 years low is our entity having full control on this asset. Is our entity able to extract benefits from this asset in the next 4 years? Forget about life of the asset. Life of the asset you ignore. But as far as this 4 years is concerned, do I have control over that asset? How to use, where to use, which country to fly, which area to move, what ticket pricing I should keep? That's all under my control. So since you have control over a resource which is capable of yielding future economic benefits, you technically satisfy the definition of asset. Asset definition is what? Resource controlled by the entity from which future economic benefits are expected to flow to the entity. Our definition is getting satisfied. When definition of asset is getting satisfied, 4 years low asset is there. I understand asset ka overall life can be 30 years also. Doesn't matter. But 4 years the asset is yours. So you should ideally show the asset in the balance sheet. This has been an argument since many decades actually. But ultimately they accepted that, and now under this new standard, we will not differentiate whether the lease is a finance lease or a operating lease. Let it be any kind of lease, asset has to come to balance sheet. This is one technical point of view definition. Financial point of view, if you observe, if you continue with the old accounting like how you are seeing on the screen right now, in old accounting what is happening is your assets are getting understated in the balance sheet. Less assets you will have. But the sales what you have in P&L, a sale is not generated using 10 flights. A sale is generated using 40 flights. But in the balance sheet only 10 assets are worked out. If I work out your asset turnover ratio, it looks like your company is extraordinarily having a great asset turnover ratio. With less assets, you are generating so many sales. Our ratio will be very, very misleading, sir. Suppose, take a company, this is X Limited, sir. This fellow having 40 flights. If 40 10 flights appearing in balance sheet, remaining 30 not appearing in the balance sheet. This fellow has a competitor Y Limited. That fellow also has 40 flights, but all 40 flights are own flights, sir. So all 40 flights are appearing in that fellow's balance sheet. You compare the asset turnover ratio of X Limited and Y Limited, it looks like Y Limited is a very, very waste company and X Limited is selling dreams there. What will happen to that fellow's equity share, sir? If that fellow, if X Limited goes to any bank, do you think bank will understand all this lease accounting and all? What he will say, this is as per India's only, auditor certified. If financial statements show extraordinary sales turnover ratio compared to Y Limited. So it's very clearly misleading, sir. They both are having similar assets, but the interpretation of financial statements is completely changing off. Hence, there was a need for repealing this old standard, sir, and they did that. Now, under this new standard, Ind AS 116, lessee books law, sir, whether it is finance lease or operating lease, and a discussion ki will not go. You just see that, is it a lease transaction? Yes. Are you a lessee? Yes. Then you royally go and recognize something called as right of use asset to lease liability. Sir, with what amount you will write? ROU against what amount will you write? E amounts how will you get? When I am using it only for 2 years, how will you record that full asset and all? We'll see one by one. That's all part of the discussion anyway. Okay. This is lessee books. As far as lessor books is concerned, old accounting still continues. Lease has to be still classified into whether it is a finance lease or whether it is a operating lease. Same accounting, whatever accounting we learnt in our basic, same accounting is still there. So if you ask me, sir, finance lease, operating lease gone or not gone, they're still there for lessor. Lessee ki doesn't matter whether it is a finance lease or a operating lease. Sir, lessor ki, why is it mattering, sir? Lessor ki, it is not a matter of recognizing asset. It's a matter of should he derecognize the asset from his books or not. If you call it as a finance lease, then indirectly you are saying that maximum benefits of the asset is enjoyed by the lessee. When a lessee is maximum enjoying the benefits, why should I show the asset in my books of accounts? Icheyal, sir. So derecognize it. Operating lease, lessee is not the person who is enjoying the maximum benefits from the asset. So I continue to carry the asset in my books of accounts. So lesser point of view, finance lease, operating lease still makes sense. So that part, that accounting depends on that classification. But lessee, whether it is finance lease or operating lease is irrelevant. Irrespective of the type of the lease, you got to account ROE asset accountability to lease liability. Detailedly we will say ROE stands for right of use asset. This is the background of the standard, sir. So all this is there in this paragraph. I'll make you notes right later on. So in the next session starting we'll make you read. Today we'll just listen. Sir, there is some out of scope items, scoped out items. In the following cases, there will be lease transaction or they might sound like lease transactions, but they are not covered under the standard. In that first one is leases to explore mineral oils, natural gas and similar non-regenerative resources. Suppose, sir, some area oil is there and our research has shown, but our land does not belong to me. So what I do, ఆ ల్యాండ్ ఓనర్ దగ్గరికి I'll go, I'll pay him money, that fellow won't sell. If he sells, it's fine. I also don't want the land once oil is extracted, no? So I take the land generally on lease and I start doing exploration activity, sir. Sir, ultimately oil will be found or gas will be found, I do not know. That's still a research only. So normally if you go and tell the owner that, sir, in that some very valuable oil is there, will he sell it to you or no? He won't sell it. At the same time, one risk is there from owner point of view. Oil is there, but only 1 liter oil is found. There's no point, no. So it's better that win-win low. Don't sell it completely. At the same time, don't hold back also. Go for a lease transaction. Both will be winning. Okay, so that kind of things they do. This lease transaction, there is no doubt. That fellow is a lessor. I took the asset on lease. I'm a lessee. But for this transaction, there is a separate standard, sir. E type of activities ki separate standard is there called as IND AS 106. Luckily, 106 is not in your syllabus, so you should be happy with that. Next, leases of that is going through some amendments, sir. After some amendments, it will come. Try to pass before that. So that's the only guidance I can tell you. Anyway, next one, leases of biological assets. Sir, you took a cow on lease. Okay. Okay. Anyway, listen. Are any biological assets? Okay. Sir, I took lion on lease, sir. Why cow? Sir, if you use okay, fine, leave it. Okay, fine. So biological assets leases is not covered under this standard because there is a agricultural standard. No, come and ask me, sir, agricultural standard lo where did we cover leases of cow and all, sir? We did not cover, no. Yes, we did not cover that. But actually speaking, biological assets ka recognition principle is already covered. Measurement principle already covered. Initial recognition, subsequent measurement should only happen at FEL CTS. But E standard law, when I make you write ROE asset account debit to lease liability, ROE asset cow against what you should write is standard law, one calculation is there. Don't apply that calculation for biological assets. If it is a biological asset, go and measure them at FEL CTS. So E standard is not applicable for biological assets. That's what they mean to say there. Next, service concession arrangements. Now this is again subject matter of India is 115, the next standard. At the time I'll tell you what is service concession arrangement. So timing, let's not go into that. I want to also listen. So it's like this, sir. Generally public private partnerships, so what happens is, a highway is there, sir. Whose responsibility it is to draw this highways? Government. What government does is, yeah, they have contracts with companies. Generally related party companies will be there. So to them they give the contract. As per that contract, what they do is they lay down a highway of, let's say, 400 kilometers, 500 kilometers using their own cost. Whose cost? A company cost, though they will lay down the road. Not only they lay down the road, they also are responsible for maintaining the road for next 10 years, 15 years. A contract also they will only take. For the work done, government might pay money, might not pay money. What government does is, if it is paying money, it's fine. If government is not paying money, what government does is, on this road, whoever travels, collect money from them. That means toll fees, sir. Toll fees, companies can collect. For how many years? 20 years. So a toll fees means the rights they'll give off. That means you do the concession, now do the work. We'll fund you limitedly or will not give you anything. With your own money, you construct the work. Later on, you operate and enjoy the benefits. Property belongs to government only. Property is not mine. So in this case, in a way, observe, you are taking the property of the government and using it for your business. I constructed road, but road is not mine, no. Road is government road. But I am interested in that road because if anybody anybody travels on that road, I collect toll fees. So I am in a way, I have right on that asset for the next 20 years to generate revenue. So actually, in a way, the lease. But that's not accounted as a lease revenue, that's accounted as a proper revenue because that's your main sales revenue basically. How to account? That's a separate standard, sir, 115 standard. Next, intellectual property rights granted by lessor, again 115 subject matter. Rights held by the lessee under licensing agreements for items like motion picture films, video recordings, plays, manuscripts, patents and copyrights. Sir, movie rights, no, movie rights will be sold to all these TV channels and all. A TV channel will buy the satellite rights of one particular movie. Whatever right they have, for that they have to keep on paying money. And sometimes the rights will not be sold indefinitely, sir. For example, I produce a very hit movie. I'll sell this movie to you for some consideration, but you can use this movie only for 10 years. In 10 years, you play 100 times also, no problem. But after 10 years, the movie again comes back to me. I have a right to again give it to somebody else. That's why some movies repeatedly they telecast. They telecast, and they say stop ultimately. Not Surya Vamsham, sir. Listen, that fellow. Okay. So there are movies like that. So those movie ka leases are not covered in this. That right what you purchased is an intangible asset. India's 38 ka normal accounting will apply. So not here. So E5 are scoped out items, sir. They will sound like leases, but don't touch them under the standard. Then there is exemptions under 116. Sir, I'll tell you this exemption easy only, but you should hold to the basic part correctly. The basic part is, if you are a lessee, normally standard asks you to do this accounting, ROE asset account debit to lease liability. A lease liability means indirectly you will be applying ACM accounting hereafter. ROE asset means normal depreciation you will do. Amounts and all we will see later. So you can escape this accounting also. You can escape this accounting, and whatever lease rents you pay, that you can throw it off into your PRL. Sir, it is easy, no sir. No leases, nothing. I pay rent. A rent P&L I put. From childhood, I like this entry only, sir. Rent to bank, P&L to rent. Is it convenient? No. Yes. This also you can do in two cases. These two cases, we cover it as exemptions under 116. That means the regular accounting principles of ROAs and lease liability and all is not applicable for lessee in these two cases. That too, it's like they are not applicable. If it is not applicable, no, I would have discussed this under scoped out items. It's not like not applicable. If you don't want, you need not apply. That means it's like a choice, sir. In the following two cases, you can ignore 116 general accounting and simply throw off the rents to P&L account. Sir, are they covered under 116? Of course, they are covered under 116, but there is an exemption from the general rule. Now, if you read here, in addition to the above scope exclusions, lessee can elect not to apply India's 116 recognition requirements. It is can elect, sir. That means his choice. If he still wants to follow the normal accounting, he can follow, or he may choose not to follow. One more important point I should show you. His choice is given only for lessee, not for the lessor. That means lessor cannot say, sir, I did not like this standard, I will follow P&L income. Not allowed. Of course, if it is an operating lease, anyway you can account, because for you operating financial list still exists. For lessee it does not exist, no. So here small exemption they gave. Exemptions are, one is short-term lease, the other one is leases for which underlying asset is of low value. Short-term lease ka basic meaning, we'll again see deeply, roughly I'm telling. Short-term lease means the lease period does not exceed 12 months. That means today you enter into lease contract itself gets over within next 12 months, and there is no probability of extension of that contract. And there is no option of buying the asset also. That means your asset I took, I will use it for how much period? Period not exceeding 12 months, and by the end of 12th month or before that, the asset will again go back to you. Asset is not going to stay in my books. Why? Because there is no purchase option. I might have the option to extend, but I am not likely to extend. So asset will not stay with me for a period exceeding 12 months. E case low, you need not do ROE asset account debit to lease liability wala accounting. Sir, then what accounting I will do, sir? What accounting you will do? A lease rent, go and throw it in P&L account. Sir, why exemption is given, sir? Can't you see why exemption is given? How much is period there? 1 year is, sir, not even 1 year, 12 months or less than that. When something is less than 12 months or 12 months, will you go and do lease liability ACM accounting? Not required, no. Anyway, ultimately everything has to come to P&L. Sir, ROE asset you create. What will happen to that ROE asset? Depreciation again will come to P&L. Lease liability again interest will come to P&L only. So don't take the trouble. Keep it simple, throw it off into P&L account. So this short-term lease, sir. Second case is leases for which underlying asset is of low value. That means if the asset is a very low value item, a low value item ki you need not take the trouble of doing ROI asset to lease liability accounting. So basic two exemptions. Sir, mari two exemptions lo how will I recognize the accounting? Lease rents recognized in P&L account as an expense. Sir, expense how? Either straight line basis or in any pattern you feel the benefits are enjoyed by. I'll tell you very easy case. Suppose, sir, one, two, three, four, five, six. They're not years, sir, months on count, sir. Okay. Sir, I have to pay rents like this: 3 lakhs, 4 lakhs, 1 lakh, 1.5 lakhs, 6 lakhs, 3 lakhs. For next 6 months, these are my rents, sir. Well, you know, lease rents, I want to throw it off into P&L account. But standard says, lease rents you will throw off to P&L account, but not what you have to pay or payable. Lease rent will come to P&L account on SLM basis. What is the meaning of SLM basis? Sir, you total all this, divided by how many installments are there. One average number will come. With that you have to do. Anyway, let's keep it simple and I'll make this also 1 lakh. Compute and tell me, sir. 3 plus 4, 7, 8, 9. 9 plus 6, 15. 15 plus 3, 18 lakhs. 18 lakhs divided by 6 months. So monthly it is coming to 3 lakhs. Okay, sir. So first month lo this fellow will be writing like this. Lease rent expense account debit 3 lakhs to bank. Coincidentally amount payable also is 3 lakhs. Fantastic, matched. I did not plan the number, sir. You should trust me. Second month low, also he should book 3 lakhs only. But he's paying how much? Extra what he paid, how much did he pay extra? 1. This he will account it as prepaid rent. You can call it as lease suspense account, lease equalization account, whatever stupid name you want to give, you give. But you cannot debit that to P&L account. So third month what will happen? Third month what will happen? How much you have to pay? 1 lakh you have to pay. But lease rent expenditure still should be booked at 3 lakhs. Sir, entry not tallying, sir. Very good. First he cancel this. Prepaid rent already there. How much is there? 1. Sir, extra 1 lakh also is there, sir. Are the outstanding rent can recognize. Like this accounting goes, sir. Suppose you did not like prepaid rent, outstanding rent names. Use one general account called as a lease suspense account. Lease equalization account. A debit difference and a credit difference and go on using that account. By the time 6 months installments are over, a lease equalization account naturally will become 0. This type of question is not there, so don't bother, okay? No, there is no such type of question, sir. But accounting will get a doubt because I'm saying that you are paying that release rent, different release rent, but every month P&L you should record only 3 lakhs means you will get a doubt, no, what will happen to the remaining amount? For that I'm telling you. Open a dummy account and dummy account will die by the end of a period, okay? So you can do like that. Or any other systematic basis. If that basis is more representative of pattern of lessee's benefit. Suppose, sir, you got the asset on lease for a period of 6 months. You say that in the next 6 months, your production units are going to be 70,000 units, 70,000 units, 60,000 units, 60,000 units, 30,000 units, 20,000 units. This is the ratio of your production units. Since benefits are coming in this ratio, you want to transfer the total lease rent also to P&L account in the ratio of 7:7:6:6:3:2. Sir, can I do like this? You can do. Ideally, this only you should do because this is clearly telling you your matching concept. But why standard gave you straight line method is every entity might not be able to estimate their future economic benefits ka pattern. So for that entities they will follow SLM. If your entity is capable of predicting your future economic benefits, predict that ratio, or ratio low total lease rents ni release it to P&L account. So basically ఇది accounting sir. So when will you do all this drama? Two cases. Short term lease or lease for which underlying asset is of low value. Low value. Sir, what is low value? We'll come to that. Now coming to the first aspect in this, that is short term lease. In short term lease, he says it's a lease at the commencement date, has a lease term of 12 months or less, and does not include an option to purchase the underlying asset. If there is an option to buy the asset eventually, then you cannot take the exemption here. Because if there is an option to buy and ultimately you buy, that means indirectly you are becoming the owner of the asset. When I know that I am going to become the owner of this asset from the first day itself, how can I not account for that asset in my books and transfer the lease rent paid to P&L account? It might happen like this. Sir, I have to pay 10 lakhs to you, sir, for buying the asset. What I told, sorry, 10 lakhs, monthly 80,000, I'll pay, sir. After 1 year, I'll become the legal owner of the asset. We agreed. Monthly I'm paying 80,000. Lastly, I become legal owner of the asset. That means, in last 12 months, whatever 80,000 I'm paying you every month, tell me, sir, are the rent, indirect consideration for a purchase of asset, consideration for purchase of the asset. But if I take this exemption, what will happen? A consideration for purchase of asset, I would have debited it to my P&L account in the last 12 months. That's wrong, no, sir. That's why purchase option should not be there. So that condition, fair enough. Next. Here, this is not examination relevant, the next point, but practically relevant. If 12 months or less than it, sir, you cannot apply this for a single asset, sir. It has to be applied for a class of assets as an accounting policy. Means, if you want to take this exemption, it's not like, E-asset ka life is, E-asset ka lease period is 9 months, I will take exemption. There is another asset whose life is 10 months, whose lease period is 10 months only. There you cannot say, I will go and follow ROE asset account debit to lease liability. It's like your cost model, revaluation model. Can you do it for individual assets or class of assets? Like that, the exemption also has to be taken only for class of assets. That means all assets which are having similar nature and usage and having a lease period 12 months or less should not be accounted under the general principle. For all such assets, lease rent should be transferred to PRL. No, sir, some assets I want to recognize ROE asset to lease liability. You can't do that. You can't do that. Different class of assets you can do. For example, you are having plant and machinery 1, 2, 3, 4, 5. You have land and buildings 1, 2, 3, 4. You have vehicles 1, 2, 3, 4, 5. Imagine temporarily that for all these assets, lease period does not exceed 12 months. If lease period does not exceed 12 months and I am a lessee, I prima facie have two choices. One is claim exemption. If I claim exemption, what will happen? The lease rents I will transfer it to PRL or apply general principle. If I apply the general principle, what will happen? ROE asset account debit to lease liability entry I should write. What standard says is, you claim this exemption if you want, but you cannot claim for individual assets. You can't say, E exemption, E exempted, these two exempted, remaining all ROE assets I'll record. Not allowed. You have to do this exemption for class of assets. Sir, entire plant and machineries whose leases are less than or equal to 12 months, you can take exemption. Land and buildings, leases might be less than 12 months, but if you want to apply general principle, you can do that. Class of assets, just like your cost model, revaluation model. How you apply for class of assets, like that only. Here also, exemption, first exemption is not applicable for individual assets, it's applicable for class of assets. Like, for example, if you want to apply, if you want to claim exemption for plant and machinery 2, then you must claim exemption for 3, 4, 5 and 1 also. Of course, only when their lease period is less than or equal to 12 months. Adi ee dabba ka mean. That only example I wrote, sir. Next, what the second category is low value assets. Now, sir, low value asset means What is low value asset? The standard does not define. What is low value asset? The standard does not define. So then how will you understand? Facts and circumstances of the case law, you see, and if you feel that an asset value is too low, when the asset was purchased, at that time, if the asset value is low, then you can claim exemption to this. Let's read. Lessee also can make an election for leases for which underlying asset is of low value. Though India's 116 does not explicitly define the leases of low value assets, it provides conditions based on which an asset can be treated as low value and the said exemption can be availed accordingly for such low value asset. So he's saying two conditions, sir. Let's leave that conditions for now. We'll see it later on. Sir, imagine like this. I have taken 4 tires, car tires will be there. No? 4 tires I have taken on lease, sir. Car tire cost will be how much, sir? 4,000, 5,000 cost. I did not buy, I took it on lease. Sir, lease less than 12 months, sir? No. Lease for 3 years. But car tires I have taken on lease. And I don't have a car. Or let's say I have a car. Okay. Let's say I have a car also. So you tell me, sir. Arey, listen, sir. Car tires, whatever. No, I don't have car also is one case. We'll come to that later on. Sir, listen. A car tires, whatever I've taken on lease, definitely that qualifies to be a low value item. Correct, no, sir? 4 tires ka cost will be 15,000 rupees. That is basically low value item. Now, ask yourself, can I benefit from car tires on its own? Means you purely, a tire, is it capable of giving me benefit? Only tire, sir. Only tire. Is it capable of, I can only sit on that, sir. I can't even play this. The stick, okay. A car tire, sir. If it falls on my leg or something, it'll hurt. So it's not even useful for playing. So the asset is basically not capable of giving benefit on its own. Okay. Or is it capable of giving benefit when it is joined with any other resources which I already have? Which resource I should have? Sticker. No, sir. I should have a car prima facie. Right? Okay. Second. Is this asset highly dependent on some other asset? Car tires are. Car tire is highly dependent on what? Car actually, right? Now, standard says an underlying asset can be of low value. Ante low value ante uddesham you can claim exemption only if both the following conditions are satisfied. Number 1, the lessee can benefit from the use of underlying asset on its own. Means the asset should be capable of giving benefit on its own, plus the underlying asset is not highly dependent on or highly interrelated with other assets. Tell me, sir, car ka tire is highly dependent, not only just dependent, highly interrelated with car. Without car, a tire I cannot use. I am having car. Now, a tire actually is a low value item, speaking normally, but it does not qualify for separate accounting under this standard. You cannot throw that into P&L account because a lease of tires what you took, even though nominal value they have, but they are not capable of giving any benefit to you on their own. They will give you benefit only when you join them with some other asset. So this accounting has to be clubbed with that car accounting, sir. That's why for this exemption cannot be claimed. Two conditions they are keeping. The lessee can benefit from the use of the underlying asset on its own, plus the underlying asset is not highly dependent or highly interrelated with other assets. It should not be. Okay. No, sir. Asset value low means, so for example, I took a car on lease, sir. Car on lease. Can I say car is low value? Car is low value item. Normally speaking, sir, you no matter how rich you are, but car is not a no, sir. No, it might. So I'm not saying that you don't have money or car is new, second hand and all. Normally, car is considered as a valuable item. It is not a low value asset. Okay. Now, sir, I took a car on lease from you. ఈ కార్ ఆల్రెడీ 15 years old, vintage model. Okay, nowhere will find this car, you only have. I took that car on lease. Sir, what will you do, sir? Sir, I have a attention seeking issue, sir. When I travel on road, everybody should look at me. I don't have money to buy Audi or Merc, so I took a old vintage car in which Gandhi traveled, and I am traveling on that. Arey, order ride, and everybody is seeing. I want that. And okay, so there will be people like that, sir. Okay, so leave him, no. Okay, listen. So I took this car, sir. Now I am saying that, as sir, the cheap cars are 15 years old, this is low value item. I will not apply this standard general principle. Whatever lease rents I am paying, I will throw it in P&L account. I want to claim this exemption. The standard says, are the low value asset not now? Whether it is low value or not, you should not check now. You should check when the asset was new. So, sir, normally lease low, do you think a new asset you will get? New asset you will get, sir, lease low. Sir, you take any car now. For example, you start a travel business, sir. Suppose you become a driver suddenly. So you want a car to roam around in the night. Okay, you want Tata Indica car, sir. And if you go to any shop or vendor, do you think he'll buy a new Tata Indica for you and give it to you? No. A Indica car already bore coaches ఉంటుంది సార్. 1,50,000 kilometers it would have traveled. ఆ car that fellow will give you. పండగ చేసుకో. Now, for this every month I have to pay 10,000 to this fellow. You'll feel bad. అసలు ఆ కార్ వర్త్ 50,000. But does it mean it's a low value item? No. A value, whether it is low or not, you should check not today. When that asset was new, at that time అది low ఉండాలి, sir. Normally software companies, normally when people start their new companies, we hire people. These people need place to work. And laptop కావాలి, sir. Do you think I go and buy 100 new Dell laptops, sir? That to software company, the employee will leave tomorrow only. Sir, that fellow, Amirpetlo somewhere he will learn basic software and comes, sir. He wants an experience. Parallel గా US లో ట్రై చేస్తుంటాడు. The moment he gets that, he'll jump off from my company. Do you think I'll buy a new Dell laptop and give it to him? No. What will I do? I will borrow, means I will take them on rent. Laptop rent ఇచ్చే business కూడా ఉంది, sir. So I'll take the laptop on rent from them. 50 laptops I take and give it to my employees. Now the laptop what I get during this lease, I have a cheap laptop, sir. Today the cheap. But whether it is cheap or not, today you should not decide. When that laptop was new, at that time, if that is of low value item, today you can claim exemption. Second hand assets by default low value untai, sir. That doesn't mean that everybody will come and claim this exemption. The point is, the asset should have a low value when the asset was new, not today. Today its value might be due, but once upon a time it must be a high value item, so you can't claim this exemption today. So it's like that. So our point here I have given. A lease of an underlying asset does not qualify as a lease of low value asset if the nature of asset is such that when new, the asset is typically not of low value. When that asset was new, if it is not a low value item, today it might be a low value item, you cannot claim the exemption. That's ultimately summary of this. Okay, there is one more point which is not printed here, but anyway, that's not very relevant also. The short-term lease wala exemption, you have to claim only for class of assets. But the second low value asset exemption, you can claim for individual asset also. Each asset ki, ఇది low value item, ఇది not low value item, like that. For low value items ki, whether you will apply this standard or not apply this standard, that's a matter of choice for each asset, not for class of assets. The individual asset ki it is given, sir, whereas this is given for class of assets. Which both conditions? Which A and B? No. Short-term leases is a different case. Leases with underlying asset is of low value is a different case. It's not like there are two conditions. No, there are two scenarios. Short-term lease, what did we understand? Lease period should not exceed 12 months. In laptop example, lease period can be 3 years also, but still you will not apply this original ROA asset wala principle. 3 years ka lease rents, monthly 500 rupees I am paying per laptop. I'll throw it in P&L account only. These two are not conditions, sir. These are two cases. Idoka case, idoka case. Right? Here something is written in bold actually. See? Okay. So this is the main part of the standard. In fact, almost next session will go only in understanding this paragraph only. But today we'll start. At the inception of the contract, an entity shall assess whether the contract is or contains a lease. Stop there only. Contract is or contains a lease ka meaning is, sometimes lease contract is very explicitly there, sir. I am lessee, you are lessor, we both recorded lease agreement. Sir, is lease contract? Yes. Okay, fine. That is plain vanilla case. Case 2, you are selling goods, I am buying goods. Between you and me, what contract is there is sale of goods contract is there. But whatever goods you are selling to me, are goods you have to manufacture, no? A machine I only give. That means you took machinery from me on lease, you are manufacturing goods and you are selling it to me, I distribute that goods. You observe, sir, in this only sale contract is there, machinery transfer is also there. That means first I have to give an asset to you, then you have to use it, produce goods, then you have to give those goods to me, I again sell them in the market. Now this is purely lease contract? No, there is a lease in this, there is a sale contract also, sale of goods contract is also there. So the entire contract law, lease can be a small component also, doesn't matter, still 116 will apply. So 116 will apply when the contract in entirety is a lease or a contract contains a lease also. That's why the language is like that. We'll see all this in some, sir, otherwise I would not explain honestly. At the inception of the contract, sir, what is inception, sir? Inception of contract means what? General meaning law, inception means starting, sir. Starting stage, we call it as inception, but in standard law, officially definitions are there. We'll see later on. At the inception of the contract, an entity shall assess whether the contract is a lease or a contract contains a lease. For the purpose, a lease is defined as a contract or a part of the contract that conveys right to control the usage. This is the main wording, sir. A contract should convey right to control the usage. Usage of what? Asset, not asset, identified asset. A asset must be clearly identified. Which asset should be given clearly? For a period of time, until the lease period out, sir, later on. In exchange for a consideration, this will become your lease rentals. Your next 1 or 2 sessions will be going only on understanding that 4 boxes. Right to use means what? Identified asset means what? A period of time, which period is considered? Consideration, in what mode consideration will be there. Look at the next line, very interesting. India's 116 requires customers and suppliers to determine whether the contract is or contains a lease at the inception of the contract. Wait there. Look at the language he is using. Requires who and who to determine, sir? Customers and suppliers. Who is customer, who is supplier? Lease contract, who will be there? Lessor, lessee. If who is lessor normally? Legal owner is called as lessor. User of the asset is called as lessee. But if you should become a lessor and I should become a lessee means prima facie contract should be a lease, no? We are still in the stage of determining whether this is lease or not. Till then, I am not lessee, you are not lessor. I am a customer, you are a supplier. If this contract, we certify that, yes, this is a lease, then a customer fellow will become lessee, a supplier fellow will become lessor. Slowly, as the standard goes further, our names will change, sir. Each stage, since we are still understanding whether a contract is lease or not, I cannot use the word lessee lessor. Because if I am using the word lessee lessor means I am inherently believing that this is a lease contract. No, we are still evaluating whether lease is there or not. Okay. Inception date discussion, now it's not required. Anyway, now that it's there, anyway, see there. Inception date basically means lease agreement ka date, sir. These parties, one day they'll record the agreement, no? That see, I am giving you this asset. you have to do this much lease rent to me. The lease is valid for a so much period and all. A contract ka date, whatever is there, that is called as inception date. Sometimes substance over form applies. Substance over form means, suppose sir, on 15th March only, lessee lessor agreed to terms. Principally they got committed also, but agreement they did not draft. But there is some evidence to prove that these parties are already committed to the terms on 15th March only. Formally agreement is written on 2nd of April. Sir, which one is the inception date? Legally if you see, contract date is 2nd April. But accounting is not based on legality, no, accounting is based on substance. So 15th March will be taken as the inception date. Hence, you look at the second point, how they have defined now is, the inception date is defined as earlier of the following dates. Date of lease agreement or date of commitment by the parties to the principal terms and conditions of the lease, whichever is earlier, sir. Sometimes what happens is, for the sake of it, one agreement we wrote, but full clarity is not there for both of them or for one of them. Later stage low, parties got clarity about the terms and all. So whenever the parties are committing, ideally a substance you have to apply, sir. But anyway, they said that date of agreement or date of commitment by the parties, whichever is earlier, so just strictly apply that. Sir, how this inception date is relevant? For what purpose it is relevant? Look at the above definition again. For this, asli contractual lease is there or not there, and a discussion will have to be done on that inception date. So typing, you understand that date of agreement is inception date. Our date of agreement ke we have to analyze whether a contractual lease is there or not there. You know why I am stressing this so much on this is, now you are seeing inception date, no? Then there is one more definition. Scroll down. Commencement date. This is inception date. Inception date definition we discussed. Inception date ka purpose is assessment of the contract is made. Assessment means we understand the contract and see whether lease is there or not there. But what is commencement? Commencement means it is that date where lessor gives the control over the asset to the lessee. Sometimes both can happen on the same day also, but both need not happen also. For example, you and me enter into a contract on 1st January, sir, but you will give the asset to me only from 1st April. Contract only is entered today, but asset ka control I will get only from 1st of April. Why not from today, sir? You might say there are different reasons, sir. Our building already one tenant is there. Our tenant will vacate in 3 months. So next to 3 months ki, you cannot give it to me, no. But agreement is done. The agreement date is inception date. The date on which you hand over the asset to me is called as the commencement date. Like that. Sometimes agreement is done today, but you are not able to give the asset today to me. Sir, why, sir? You don't have the asset. You don't have the asset only. Without asset, how can you enter, sir? Sir, I am not doing accounting today, must understand. Inception date is not relevant for accounting. So whether asset is there or not, who cares, sir? Anyway, I am not going to do accounting, no. So today is only an agreement date. In next 3 months, maybe you will manufacture and you will give the asset to me. Accounting will be done on commencement date. Ikkada accounting starts. For that purpose, commencement date is relevant. So 2 dates, sir, inception date and commencement date. Inception date is just for evaluation whether the contract contains lease or not. Commencement date is for your accounting purposes. See, page unnecessarily left blank. This is a summary of that chart. This paragraph, don't read that chart. Come to here, sir. So slowly we have to go to identified asset concept and then right to control point. Then lease and non-lease separation is there. Then there is an optional exemption. Lease consideration allocations. Inception commission detailed I have given here. Lease term concept. So anyway, go back.